Hey everyone, happy Thursday, August 28th. It's about 8:55 in the morning on the West Coast, and it's time for another market update. The big news going back to last Friday was the Fed and other central bankers from around the world were meeting in Jackson Hole, Wyoming for their annual Jackson Hole Symposium. Um, Traditionally, on the Friday at the end of that meeting, the chair, the Fed, Chairman Powell in this case, gives a press conference. And oftentimes they use that press conference to telegraph what their next move will be. And obviously, the markets were very interested in this because they have a meeting coming up in mid-September, I think the 17th or 18th. And so everybody's kind of, been wondering, will they cut rates? What will they do after that? And so forth. And going into this meeting, people were a little concerned with where things were headed. Maybe they wouldn't be cutting after it was pretty strong indication they would be. But thankfully, Chairman Powell at that press conference said positive things. So he did signal a rate cut ahead. And the key quote here is with policy in restrictive territory, which they are, meaning rates are high, the baseline outlook and the shifting balance of risk may warrant adjusting our policy stance. So again, some double speak there, but the markets took that as a positive sign that they were on track to cut rates in September. I think at that point, the chances of a rate cut jumped from I think about 70% to a little bit over 90. Right now it's about 85%. It's backtracked a little bit, but still very strong. So overall, that was great to hear. Made the markets feel at ease, not so concerned about maybe another pause. But again, we're going to have to keep our eyes on the data and what happens at that press conference when they do make that rate cut and what they say about October and so forth. Second thing in the Fed, I'm sure you've seen in the news, Fed Governor Lisa Cook was fired by President Trump. She is now suing the administration to say they can't do that. We'll have to see what the courts say about all that, so that'll be interesting. One thing to touch on there, someone asked me, if President Trump is able to replace her, wouldn't that be good for cutting rates? It's a double-edged sword, kind of, because definitely, she's been someone that's voting not to cut rates, along with Chairman Powell. If President Trump is able to replace her, then obviously he gets someone probably in there that's going to be voting to cut rates. So that's a positive. However, the markets really don't like they want independence. They don't want the Fed to be controlled by the administration. They want to be able to make decisions on its own because, it doesn't matter what political side you're on, who the president is, but, if the presidents can, apply political pressure to the markets and change policy and rates based off that and not based off of, data, which they should be going off of, that could be a bad thing in the long run. So that's why the markets, are pretty iffy about, any replacing Fed governors or Fed Chair Powell and things like that. So that was the Fed news for the week. Probably more drama next week. So we'll see what happens there. We got new and pending home sales for the month of July. Both those are still slow. So first, new homes down a little, about negative 0.6 month over month, down a little over 8% year over year. The median sales price is at 404,000. Yeah, as you can see, it's been kind of in this, about here. It's been pretty slow. Month supplies up to 9.2, but keep in mind that only about 121 of those 499 are completed. So there's a lot still being built, hasn't even been started yet. It's just dirt. So again, obviously rates have slowed things down in this market, have slowed things down in the next one too, which is pending home sales. Pending home sales for the month of July we're down negative 0.4% month over month. They're up slightly compared to last year, which just shows you how slow things were last year as well. But again, this is homes that went pending in the month of July, haven't closed yet. So they were shopping. They're still basically hasn't closed yet. We'll get those final sales numbers upcoming. But again, this has a lot to do with rates being high, people being a little hesitant to buy, and a lot of it also has to do with this time of year generally is a busier time, and obviously we're not seeing that activity. Next thing we got June appreciation. Our appreciation is always slightly behind everything else, and it showed the pace of growth is slowing even further. So it didn't, it's not negative, but it has slowed. So month over month, seasonally adjusted, was negative. It's negative 0.3%, and again, that's because normally this time of year things are a little hotter in the market, which generally causes appreciation. Non-seasonally adjusted, when they actually did the math, is 0.1% positive. So still up a little bit month over month compared to the previous month, but definitely slower than it was a few years ago. Year over year, we're still up about 2% at 1.9%. So again, slowing down, obviously rates and lack of activity and lack of sales and all that kind of stuff has something to do with that. So again, not as fast of a growth, but not depreciation. And, if rates do come down, this will probably turn around pretty quick and start ticking back up because, again, lower rates would create more demand. More demand would create more sales, higher prices, things like that. So, good for current homeowners that stayed positive, but it has slowed down. So, for people that wanting to see home prices kind of slow down, that's a positive as well. So, next thing we got today was the second look at the second quarter of 2025 United States GDP. So previously, I think it was at 3%. It was estimated to come in about 3.1%. Came in at 3.5%, which is stronger than expectations, obviously. And the reason that's important is the stronger the economy looks, the more likely the Fed is not to make rate cuts. So it wasn't necessarily a great thing for us to see. And a lot of it had to do with consumer spending. We saw retail sales last week. United States consumers, us as consumers, we're still consuming. So are we putting on credit cards? What's going on there that we keep still spending at such a high level, which is propping up our GDP because the United States economy works off of us as consumers. When we spend, it's going well. When we don't spend, it slows down. So again, important because we don't want to slow down too much, but we also don't want the Fed to have any excuses not to cut rates. Next thing, initial jobless claims came at 229,000, was expected to be 231. Again, pretty low numbers. It's basically people aren't getting laid off, but once they do get laid off, they're still having a hard time finding jobs. I think that's about 1.95 million as far as continuing claims. So again, that's important because the stronger the job market looks, the less likely the Fed is to cut. If the job market starts to show a lot more weakness, that's when the Fed will act. And again, don't want people to lose their jobs, but definitely want the Fed to act. Next thing, so where does that leave us? The average 30-year conventional is down to about 6.5 today. We were at 6.62 last week. This is the low since of October, I think. So that's a good news. We've hit that land. We've got to 6.5. Next step, let's get down to 6.25. Let's get to 6. So good to see there. Good to see that we didn't give back some of these gains we've had over the last couple of weeks. And again, one step in front of the other. Let's just keep going lower if we can. And a lot of that's going to depend on tomorrow's PC inflation data. Then we get a jobs report next week on Friday, which again, that's the big one probably, that will, have the biggest effect on us. Another inflation on 9/11, and then on the 17th, the Fed will meet and announce what they're going to do with their next rate cut, pause, whatever they're going to do. And again, we kind of know at this point, it's 85% chance the market's saying they're going to cut. That's, reason we're at 6.5 is because the markets think that. So we won't necessarily get a lot of downward movement if the Fed cuts rates that day because it's not a direct correlation. However, if at the press conference and stuff, if Fed Chair Powell says positive things about the next month, that makes us think he's going to cut in October and so forth, that's when we're going to see a positive movement. So that will be something we have to keep an eye on. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great Thursday, everybody, and have a great week. Thanks a lot.